There is this key technical level right around 4,800 for the S&P 500 that if it does not sustain that level, it could just trigger a lot more selling just because the market has fallen down so low.
You've been predicting this a lot of the summer. We've been talking about how hot the market has been all summer long, but you warned us that this pullback could be coming.
Well, right. So the technical setup has been there for quite some time. The market's been rallying for over 2 years. It started with economic normalization post-pandemic that was boosted by inflation and consumer spending, government spending, and then the whole AI craze. So the market was really pushed to really extremely high levels, overran itself, also pricing in the expectation for Fed rate cuts. So when those cuts came, it became a sell the news event for sector rotation, but also set up for a big pullback simply because of the technical outlook. The market's well above its key critical support targets, and now we have this fear event into play, and that's just compounding that entire situation and causing the sell-off to be much deeper than it might ordinarily have been.
Yeah, I know you talked a lot about the fear factor right now, and that's what we're seeing a lot of today in the market. Is this just a knee-jerk reaction, or could this fear lead us even further down in the market?
So I think it is kind of a knee-jerk reaction. I think that the market could continue to sell off because we're looking at some pretty big gains. So the opposite of FOMO, the fear of missing out, would be the fear of being in too long. People are going to try to flee to cash as fast as they can to save their gains. But I think ultimately it's going to be a buying opportunity. The market will correct, but economic conditions are still okay. We're not in a recession now. The FOMC is expected to cut interest rates, and that will signal a pivot. So long as we're able to get past the next couple of months without having a recession, I see the market bottoming before the end of the year, possibly as soon as next month, and then beginning to rebound.
Well, that's not so bad of a long-term outlook, but I feel like there's a lot of opportunity in the short term to have a lot more volatility in the market, Thomas.
Yeah, I think that the market could continue to fall. It's definitely going to be under pressure in the near term, the next couple of weeks. Um, but there is a chance for it to rebound. But just because I think that's going to happen doesn't mean it will. There is this key technical level right around 4,800 for the S&P 500 that if it does not sustain that level, it could just trigger a lot more selling just because the market has fallen down so low. In that situation, the S&P could end up range bound in these low levels that it saw over the last 2 years, which is really a bad thing because as far as the long-term trend goes, the S&P is about 45% above its long-term trend. So ultimately, it could fall another 45% on a technical basis. I don't think that's likely, but it is possible. The more likely scenario, given assuming that the market continues to be under pressure, breaks that key level, is that it will remain range bound for many years. So that that trend line projected into the future, assuming sideways price action from today, it's going to be 10 or 12 years before the market reaches that line. Not saying that's also going to happen, but it's a significant risk that the market could be range bound for quite some time and investors will struggle to see gains on a year to year basis.